Thanks for joining our session on the It All Starts with a Payment. First session here on the opportunity stage. My name is Glen Sarvady at 154 Advisors, and I think we have a great panel that represents a broad spectrum of the players in the payment space. Although, as we actually dug in a bit deeper on our preparation, I discovered what looked like a fairly clear distinction across the spectrum of how people may interact with the payment space. It seemed like there was a lot more blurring of the lines where everybody participates in a lot of different ways than I had kind of initially assumed based on stereotype, which I think actually works really well for the topic that we're dealing with, because the whole idea of embedded finance is that these lines are blurring. So let me give a quick introduction to each of our panelists, and we'll jump into what I think will be a great discussion. We also, if you haven't noticed already, there is a question box on your screen, the chat on the right side. And if you would like to add any questions there, we would be happy to field them along the way and continue an interactive conversation. I'm joined by Kothai Senthil. She's the Vice President and Head of Payments for Albertsons, the grocery store chain that operates under a series of different brand names across the country. David Tax is Senior Manager of Payment Strategy and Innovation for TD Bank. Matteo Gamba is the Product Lead for Payments at Wayfair. Manash Bhattacharjee, is the Head of eCommerce Product Management for PepsiCo. And again, my name is Glen Sarvady. So based on the conversations we've had already, I'd like to kind of just kick off with Matteo, if I could. Wayfair's business is probably the most kind of e-commerce focused among the panelists we have here. Although, as we were talking, I was surprised to learn that it's not exclusively e-commerce, that you also still do receive check payments in the mail and take phone orders and things along those lines. Can you say a bit about where your focus has been from the payments experience and how you bring all those different pieces together?
Yep, totally. You said it right. Payments is still a very broad experience, and depending on the market, we get very different needs for our customers that we need to fulfill. Wayfair, being a primarily US-centric company, has a strong focus on credit and debit cards, but also expanded beyond that. And as the company started to focus more on international market, we started focusing on a broad set of different payment options that could allow our customers to complete their shopping journey. We really think about payment as something that facilitates the shopping experience, and it has not to be a blocker. So with that mindset, we really try to optimize the checkout process and give our customers the best possible payment opportunities to complete their journey. And this means localizing the payment experience. This means expanding beyond traditional payment methods and go into a direction that allows customers not only to cover their basic needs, but also to purchase more and more frequently. And that's where the whole buy now, pay later financing become of critical importance. Then it's also key to keep in mind that we have probably older customers that are more used to traditional payment methods. And as you said, some even stick to cash or check when sending us payments in the mail. So we really want to make sure that we are inclusive and can support a different set of customers.
I'm glad you mentioned buy now, pay later. We're definitely going to come back to that because that's such a hot topic these days, and I think everybody on the panel has a perspective to share. But that's interesting. So it's not only check; you're actually receiving cash in the mail as well. That's remarkable.
Sometimes as well, yes.
Kothai, similarly, I mean, I assumed originally that your focus would primarily be the in-store experience, but obviously, given the events of the last 18 months or so, curbside pickup, app-based delivery, things like that, clearly have become a bigger part of the mix. And I guess you work both with your own app as well as partners. Can you say a bit about how that whole experience pulls together and how things have shifted over the course of the last year or so?
Yeah, of course. And just to be clear, Albertsons is located in most of the states, actually. Chances are you've probably shopped at an Albertsons property. So we own Safeway and Lucky's in California. Safeway is actually a national brand, Bonds in Southern California. We have Shaw's up in New England. We have Acme in the Mid-Atlantic. We have Joel Osco in the Midwest, Tom Thumb, and in Texas, and a whole bunch of other stores. So chances are you've probably shopped at an Albertsons store at some point during the pandemic, but also just overall. If you go to Instacart and DoorDash and Uber Eats, a lot of them are doing grocery delivery. That's how Instacart started. DoorDash and Uber Eats have been very heavily getting into grocery delivery over the last year. And when you go into those apps, you'll see different stores that you can shop at. You'll see Safeway, you'll see Lucky's, you'll see Rite Aid, Target, Walmart, a whole bunch of other stores that are all available there. And we offer our products through those apps as well. And when that purchase happens, the Instacart shopper or the DoorDash shopper or Uber Eats shopper, whoever it is, comes into our stores and picks all the items that that customer requested, and they go to checkout, and it processes as a card present order, because when you're in the store, you present the physical card. When you do a transaction online, we have our own app, and this is true for all of our banners. We have our own app, and you can also do online shopping there. That is a card not present transaction. So we have both card present as well as card not present.
We also talked a bit about, there has been a lot of talk around the cash shortage in the U.S. And, as people did not shop at the point of sale as much over the course of the pandemic, cash didn't recirculate as much. You still obviously, as a grocery store, deal with a fair amount of cash. Can you say a bit about how that might have impacted your operations?
Yeah, in terms of the actual cash shortage that happened in the early part of last year in the first, second quarters, I don't think we really saw much of an impact from that, meaning we still had access to bills and coins as necessary. I think the one thing that we did see, though, especially in the March-April timeframe, is people stopped using cash as much, and you started seeing a lot more debit and credit transactions. That has kind of normalized over the last several months. But that initial spike that happened in March, especially in debit card volume and credit card volume, we saw that. But just one other point on cash. Cash is it's a payment method that is very manual for the most part. There's a lot of processing that goes on behind it, and when you add up all of the costs associated with cash processing, it's actually more expensive than debit, at least for us, and I'm sure that's true for most merchants. So it's definitely a payment method that we would like to see less of, and we'd love to see more of the debit and the credit card side.
I think, and I want to come back to that as well as cost and how everybody prioritizes the experience versus the cost of acceptance. Because I think I have heard before, the cost of cash is greater than the cost of debit acceptance, but you are distinguishing between the cost of credit acceptance as well. So that's an interesting kind of nuance that we should talk about. Manash, again, I think of PepsiCo primarily from a B2B standpoint, but you also, as we were talking, shared, you've got some direct-to-consumer businesses as well as dealing with office parks, professional sports teams, and things like that. Can you kind of give us a bit of a rundown about how you thought about the payments process in your shop?
Sure. Yeah, I think just to give a quick background, I had product management, product design for PepsiCo eCommerce. eCommerce as a what do you call it? A center of excellence started around 4 or 5 years. Over the last 3-4 years, we have seen an acceleration in terms of demand and also different scope of how you are using digital commerce, not only for direct to consumer but also for B2B, as well as partnerships across NFL teams and the likes of it. So from the payment perspective, we are working around a lot of innovative experiences, right? So D2C is actually pretty standard, right? But then we have D2C for consumers across multiple brands, right? Where it becomes interesting is, as part of our sustainability drive, we want to encourage consumers to opt for sustainability measures. For example, if consumers are buying SodaStream, and as part of that, they also buy the CO2 gas cylinders. After the usage, we want to provide them incentives to recycle, those cylinders, right? So how do you build a seamless, convenient process for consumers to opt into those kind of experiences? Very critical, and payment plays a very important part. As we also move into B2B, we have pretty broad different models, right? There is offices that we want to reach out to. There's convenience stores. There are also teams like NFL teams, sports teams, right? And the models over there is like, you give them credits, but at the same time, they can also go over their credits in order to purchase. So those are again different kind of support and payment processes that we need to manage.
I think it's really interesting, the SodaStream piece that you mentioned, because again, I don't think of PepsiCo as usually interacting directly with the consumer. So you've got the payment process for the refills on those cartridges when people need to buy more. But then, as you point out, do you think of it almost, you've obviously got kind of the social responsibility aspect, but almost a loyalty, I would think, is with regard to the ability to re-engage back those canisters so that they can properly dispose of them? Is that something you think of in
Yeah.
terms of loyalty and retention?
Yeah, I think so. I think as CPG goes into and CPG companies starts optimizing for sustainability and those kind of eco-friendly kind of packaging, recycling those packaging it's a pretty important step in the entire process, right? And we need to provide the right seamless process and the incentives to the consumers to do that. And we would see that being much more prevalent across both developing countries and developing countries in the coming years, right? So SodaStream is a really prime example, and we will see that expanding not only, I guess, on CPG goods, but also across other goods too. And it's going to be an impactful thing on the industry.
Great, thank you. David, I think you can give us a couple of interesting perspectives here. On one hand, you're the one representative here from TD Bank that can give us a view of the Canadian market, which I think had a different experience and was further along than the US in many regards with regard to some of the different digital payment solutions, tap and go, et cetera, contactless. And then also as a financial institution provider, you actually have a further kind of inroad, not only into the consumer, but the merchants that you're actually enabling to work with the consumer as well. Can you share a bit on both those fronts?
Yeah, absolutely, and it's exactly that, right? As the financial institutions, we really are at the center of the consumer side as well as the merchant side, needing to support. TD, we have a merchant solutions business who provides point of sale technology. We have business banks who supply the accounts and all the business management services, and then of course we have consumer businesses where credit cards, debit cards, and all the like. I think one of the interesting things, and I heard it a bit earlier from Matteo, which is people really, they don't think about paying, they think about shopping, right? Like it's kind of the means to an end. It's part of that overall journey of doing something like buying something on Wayfair or grocery shopping at an Albertsons store or buying a SodaStream. So I think during the pandemic we've seen a lot of changes, and especially in Canada, I've been a little more close to that, but we've been watching, obviously TD is a North American bank, and so we've been really tracking the behavioral changes and the payments changes over that time. And we've seen a couple of really interesting things, in addition to what we've talked about already around, consumers moving online, right? When stores have been closed, and particularly where I'm in Toronto, we've probably had one of the longest lockdowns, in North America and if not in the world. And to your point, in Canada, we've actually had contactless, the NFC tap and go technology. It's rather ubiquitous up here. And so before the pandemic, it was already very prevalent, right? Customers like the convenience of being able to tap their card for a payment and walking out and really having that happen very quickly. And so I'd say, on average, it was about 3 in 5 transactions would have been a contactless transaction in Canada if I were to go back 2 years ago. Over the pandemic, though, you added on top of that people's concerns about hygiene and sanitation and whether surfaces were safe to touch, and you saw that jump up. And there's two factors. One is again that sanitation. The banks also increased the limits on those transactions to make it so that customers could do that more often, and you saw that actually jump up to about 4 in 5 transactions. So really, when you compare that to the MagStripe technology, which you may have seen recently, that MasterCard has said that they're going to start to phase out over the next decade. That's really become the de facto standard, right, for card payments. And again, it's a that convenient experience. The other thing that I'll talk to, again, we've talked a bit about cash, and we've seen some interesting trends when you look in Canada or globally, that cash, it kind of over the time and when people were kind of under those financial and economic uncertainty, around the pandemic, you saw many people actually take more cash out of ATMs. Now, they weren't necessarily spending it; they weren't in stores and able to spend it. I mean, a lot of my local businesses here around me have said they won't accept cash; that they're contactless payments, credit, debit only. But customers really, they wanted to hoard cash. Cash kind of acted as that safety blanket. The images of people stashing cash underneath the mattress. And I'd say the other side of that was that consumers flock to larger institutions versus smaller ones, right? People go to safety in these times. So it's interesting when you think about cash as really that foundational payment method that kind of took on a different life, so to speak, over the course of the pandemic.
I'm curious, the cash piece that you mentioned, I hadn't really thought about that in Canada. How prevalent was that you saw where people or merchants actually refused to accept cash? And I also, part of the thing I've heard is that the actual cash withdrawals and cash holdings, to your point, went up. Even if people weren't spending it, they were really holding it for a rainy day and thinking they might need it in the future. But does that look like a long-term trend, or you think it was more of a temporary thing as far as cash usage?
Yeah, I mean, that element for sure is a temporary thing. But one thing that has been true is that the usage or the transactional usage of cash has been declining, for a while now. I think if anything, the pandemic will have a modest impact of accelerating that decline. But it still remains something that is an essential service, and that's why you're seeing some discussion and something that we're talking about within industry and with our central bank is things like digital currencies, right? What is that future of cash as consumers move away from that current form, that manual form, as we discussed earlier.
If I
I'd
can
like to
also
go back
add,
to you. Yeah, please.
sorry, if I can also add, right? I think we are talking also about developed countries, but what, based on my previous experience at MasterCard, we always found events like COVID-19 became a big accelerant for going from, cash-based transactions to digital transactions in developing countries too, right? I mean, the spike that you will see in developing countries has been huge compared to what we're seeing in developed countries. So just an added flavor over there.
Thanks, Manash. That's helpful. Kothai, I'd like to come back to you and maybe get everybody to weigh in on this one as well, with regard to some merchants deciding not to accept cash. I think we talked before about your philosophy of however the consumer wants to get it done, satisfy your customer. But more broadly, I'm kind of curious how you think about the process of checkout efficiency. And again, I don't know if this is a case in Canada as well, but we've obviously had a workforce shortage in places like grocery stores as far as checkout personnel and things like that. I've noticed some longer lines locally in my stores lately. And I'm just curious, how you kind of balance the difference between managing efficiency and managing cost of acceptance, how you kind of play that calculus between the two. And I'll throw that question out to everybody as well. If I can start with you, Kothai.
Yeah, and obviously both are important. Efficiency is very important for customers. They might not necessarily know what the cost of acceptance is or really care about it, but that's important for us also. When you think about the traditional retailer, and grocery stores are a prime example of this, the experience honestly hasn't changed that much from when I was a kid and I used to go grocery shopping with my parents in the 80s. The experience was very similar. You basically walk up and down the aisles, take whatever you want, put it in your cart, and then you end up at the checkout lane. And that's still very much the experience today. And there's a lot of innovation in that space right now to basically reduce the amount of time that customers are spending doing things that they might not necessarily want to, which is standing in a checkout line. If you take a look at the Amazon Go stores, for instance, I think they've kind of really pushed the envelope there and pushed the thinking there with their grab and go or walk in, walk out stores, whatever you want to call it, where you effectively use your app, you authenticate yourself on the way in, you pick up whatever you want off the shelves, and then you basically just swipe out to leave. And that same concept and things like smart carts are also gaining traction. You can see that in a lot of the Amazon stores, the physical stores that are popping up now. And then there's something that we've also launched, which is called Scan and Pay, which is an app that is available for download off the App Store. So anyone who wants can go and get it. You can download the app. You can go through your local Safeway store or your local Albertsons store. and you can scan all the items you want, and then you check out on your phone itself. So that way you avoid checkout and you don't actually have to wait through the line. That's some of the stuff that we're doing on the innovation side to lower the amount of time and the friction points that customers face when they come through our stores. In terms of cost of acceptance, we're working with the networks to keep that cost low as well.
Yeah, until we spoke just the other day, because I had no idea that you'd actually put that into market already, the scan and go type solution at Albertsons. I think you mentioned Safeway. Is that still more on the California side of things? But I'm curious what your experience has been with that so far.
Yeah, no, that's correct. It's not available in all of our stores. It's in pilot mode right now, but the app is available for anyone who wants to download it off the App Store. We have a select number of stores in Northern California and in Boise, Idaho, which is where we're headquartered, that have already rolled out Scan and Pay. But you'll see that rolling out in more of your local Albertsons stores, whether it's Jewel Osco, whether it's Shaw's, whether it's Acme or Tom Thumbs or Vons or whatever the case is. That rollout is happening. In terms of feedback from customers, so far we've only heard positive feedback. That being said, though, it's not something we've actively marketed. So the customers who see it or the customers who use it are the ones who go into the stores and they see Scan and Pay and they're curious about it and they're like, what is this? And so they go and they download it, and the experience so far has been great. It's interesting to them because they can do everything. They can see the price in real time. They can see all the discounts applied in real time, and they can check it versus the tag that's there to make sure that they are getting the discounts that they think they are. And then they do everything on their own. It's entirely self-service, and then they just walk out of the store once they're done with their shopping experience. So far the feedback has been very positive.
And as you pointed out, I mean, obviously you're dealing with the early tech adopters, so people who want to use these types of solutions are going to be kind of drawn to it. And I have to assume that, at no point in any kind of foreseeable future are you going to be really kind of pushing that solution on people. So by definition, you should only be really satisfying the people who want to get out of line. And I'm assuming that between that and self-checkout and the good old-fashioned register attendant, you can kind of balance out your lines a lot better.
Yeah, no, that's definitely correct. If you're just going in to buy milk or eggs or fruit and it's a simple purchase, there's no reason for you to have to stand in line again. Scan and Pay, I think, is a perfect innovation for that. You just go, you quickly get whatever you want. If it's milk or eggs or if it's bananas, you weigh your produce and you scan the barcode, and then you're done. And then you can just walk out. So instead of spending another X minutes in the checkout line, you effectively just go, grab whatever you want, and then you walk out. And hopefully that is a time savings for our customers, and it's a win for them and a win for us because we're also decluttering our checkout lines.
Right. Matteo, what about you? I mean, I'm thinking obviously cost of acceptance has to be very important, and maybe roll in a couple of the other types of solutions. You're, obviously somewhat limited. You've mentioned you do get some check and cash, but things like Apple Pay, PayPal, and other solutions as opposed to just a pure acceptance of a card on your site. Can you say a bit about how you approach those?
Yep, and I think there is a good parallel with the example that we just made about the brick and mortar checkout experience. I think also in e-commerce is really key to try to make that process as smooth as possible to avoid customers dropping off the process. And I think you mentioned Apple Pay, Google Pay, PayPal, a set of wallets that already collects and provide payment information that customers have been providing to someone else. And those type of payment methods really help the customers to smoothen out the process, make it faster, easier, and more frictionless. I think this is the goal that we are trying to achieve. Improving the customer experience, make the process smooth, and allow the customer to check out as quickly as possible. You mentioned also cost of acceptance. That's another key point for an online business. It's something that should not concern too much the end customer. That's a cost of business that you have to deal with, but obviously you want to minimize it as much as possible. And part of that minimization process also stands in the ability of the merchant to drive a customer towards the payment method has the highest acceptance, but also the lowest possible cost. And this is a journey that starts earlier on in the funnel. From the moment a customer lands on your website, they start considering what kind of payment options are available. And you might have this displayed in the footer or across the funnel, basically giving a hint to what is the right option to a given customer. And that can help customers to drive consideration versus a payment method that might not otherwise have been considered, that has a lower cost for their purchase. At the same time, you might be able to improve the average order value by pushing customers to use a financing product or a buy now, pay later option. And that's, I think, really part of the core value proposition that these type of payment methods offer, is to let customers know that they can buy more, they can afford to dilute the payment across multiple installments. But it's important to let them know earlier on in the funnel.
Makes sense. Makes sense. I do want to remind people again, we've got the chat window open on the right side. Love to kind of follow up on any of these points. If you've got any personal experience along these lines or follow-up questions, please do tap in, and we'll do as best we can to get to those. David, any other different experience, both given that you're probably working with a variety of merchants at TD Bank, as well as the Canadian market specifically, around some of these different approaches about acceptance, cost of acceptance, ways to really speed the checkout flow? As I believe it was you that said, people aren't there saying, hey, I'm going to go pay for something. I'm going to go shopping. So this is not the piece that they're looking forward to doing necessarily.
No, that's right. And, I think we've hit on a couple of really important, principles and approaches on how do you successfully, have a payments business. And, customer choice is really, one of those key factors, right? That you want to make sure that, for the merchants here, and same thing for payment service providers, banks, and others, you want to make sure that your customers have the set of choices that available to them that give them, the best options for their particular needs, their particular preferences, their particular requirements. And so, I think that when you provide those choices and then, combine that again with how do you then make sure that it works for the merchant, right? So again, providing options that also drive, lower cost of acceptance for a merchant. Some are more price sensitive than others. We talk about things like buy now, pay later, and we'll probably get into that a bit more. But ultimately, that's something where if it's driving sales, sometimes merchants are willing to pay a higher price to make sure that they're securing those sales. I'd say the other element when you think of banks is that you are also, the financial advisor to the customer and to some extent. And so you're helping them manage their finances. You're helping them understand their spending. And so, we also have to make sure that we're making sure that these payment methods work for the customers, that they understand, that they don't, overextend themselves. And so I think that's something that you're starting to see a bit, in the industry of making sure, and we talked about this, in our prep call. When you pay in cash, you really feel the pain, right? You put those $20, those $100 bills on a table and you feel it. When you tap a card, you don't quite feel it the same way, right? Maybe if you have to, you might have some semblance of it. And then, we're talking about, again, those really frictionless, futuristic experiences, the scan and go, scan and pay, just walk out, where there is no payment at all. And the customer has no sense of what they just spent. And so I think that's something that you're going to see. It's not just that integrated payment, the invisibility of the payment, but then we want to make sure, how do we integrate that advice, to help the customer understand, again, those financial implications, to give them confidence that they're spending within their means in a way that works, like I said, for both the merchant and for the customer to again, fit that choice to the right person in the right business at the right time.
It's interesting. It just occurs to me, the one person or type of role that we don't have on this panel might be, a consumer advocate type person to really speak to that point of it. I think, Dave, you did a nice job of kind of filling in on that role. We've talked about, I think, buy now, pay later has come up 3 times already. So why don't we dive into that? Manash, before I do that, anything that you had to add in terms of this last line of conversation?
Yeah, I think so far we've been talking about direct to consumer. Just to add the B2B flavor, I think what's happening in the B2B space is that some of those innovations that we are talking about, like digital payments method, etc., are still probably not as adopted or as highly adopted as it's being adopted in direct to consumer, right? So if I can throw in some numbers, right? For example, in the B2B side, still I think 50% of the transactions are still happening over check, right? So and also virtual cards are still very low in usage. So what's happening is when you are, let's say, reaching out to, let's say, small B2B customers, right, SMEs, right, not large customers, right, they are still reliant on paper-based methods, which are archaic, but their systems hasn't been adopted to address that. So I think what's happening is quite a lot of time we have to do a hybrid approach, right, where we have to manage a set of platforms and the payment methods where the end users, let's say a B2B partner, is using virtual cards and or corporate cards, purchase orders, etc. At the same time, there are also other large portion of users who are still, using legacy systems like check and paper-based formats of accounts. So I think balancing both becomes challenging for a large organization because one requires more manual processes, right, and the other requires more technology-based processes. And like, how do you have a balance of both becomes challenging. So yeah, just a call out there.
Thanks. Thank you. Matteo, why don't we go back to you in terms of buy now, pay later? Because I mean, again, I may be stereotyping, but it seems like it's the most logical fit for your business, a relatively high typical price point that you're looking at. On an online type setting, it's probably a little bit easier to serve up that offer. How do you think about that? How does that get integrated into your workflow? And I think it's David pointed out, the cost of acceptance on that is relatively high, but on the other hand, if it can actually drive additional volume, that's something worth paying for, I believe. But I'm curious your thought process around the whole buy now, pay later.
Yep, totally. And I think buy now, pay later is a type of payment method that can help a business like Wayfair that has quite often large basket sizes fulfill a few different needs for our customers. First of all, it can help more people to consider to shop on Wayfair, so drive more traffic. Think about it. If I know that the buy now, pay later solution is available on the website, I will give it more consideration. Wayfair versus another website at the same condition, it's better to have that kind of option. Then it can also help customers to actually increase their purchasing power, gives them the ability to purchase more at the same time. I can afford more as a customer if I don't have to pay the full amount up front. Then it also helps to complete the purchase in a better way. It helps with the conversion rate of the customer. Think about it. If I am only getting charged 1/4 of the amount, it's probably less likely that my card might be rejected for insufficient funds. And then it also helps to increase the loyalty and the frequency at which customers purchase. So having a higher lifetime value, that is obviously what a merchant is seeking for. So the sum of all of these put together, you have to benchmark it against the additional costs that these type of payment methods might have. Because obviously you are deleting the payment, money is arriving later, so you have to compensate a little bit the providers that you work with. But generally what we've seen is that the net benefit is there. So it is something that you would want to test as a merchant and understand what is the right price point, what is the right type of options that you want to offer. But we definitely see a value in this type of offering. And the more provider coming to the market, the more beneficial conditions for customers with 0% credit, with no hard credit checks. They're making these options much more pervasive and available to end consumers.
So this ties back to the earlier comment you made as far as really starting to introduce the notion of the payment options fairly early in the journey. So I think what I'm hearing is that you would make it clear to people that the availability of buy now, pay later is there pretty early in the process, which might change the way they think about the total amount they might put in their shopping cart.
Yeah, totally. And that's a key component to the whole strategy. You want to start from a high level messaging earlier on, just to give people an understanding that that option is there. The closer you get to the bottom of the funnel, the more specific you will want to be. If you see most of the e-commerce websites that offer this type of options do present on the product detail page some kind of price transformation that informs customers that they can purchase paying 1x of the total amount in a given month. And that helps the customer really think about how much am I going to spend now? Am I gonna add more items because that's gonna be my total? So this messaging is key to give customers the consideration that they need and the choice. And then the closing the deal is really the final part where the checkout experience is key, where the UX has to be good. But that's not really the point where customer will make the choice. You need to start that messaging earlier on in the funnel.
That makes sense. I mean, cart conversion obviously is particularly key in the online setting. I know that buy now, pay later really took off in the European market before, in Australia before it did in the US. And you mentioned, I'm not sure what your percentages are, but you're primarily a US-based company. Did you see more experience in non-US markets first that kind of gave you lessons learned about how you approached it in the US? Or I don't know, did you have enough traction there in buy now, pay later that kind of informed the way you approached it?
Yeah, so Wayfair is a business that primarily operates in the US, but we also have presence in the Canadian, UK, and German market. And the more you go into the European world, the more diverse and variegate becomes the payment ecosystem. And there is also where we've been experimenting more with this type of financing options with buy now, pay later. And you can really see the value of this option. So I think it is a key component of the payment strategy of a large merchant. And the US, I would see it as the next frontier, where a lot of merchants have started to offer that. I think 2021 was really the year of buy now, pay later. There are many competitors. There is going to be a lot of competition on the market, new providers popping up, conditions getting better for customers, consolidation as well, and potentially regulation in the future. I think this is something that we can expect a little bit. Let's see if and when and in what shape that will come.
I think we can safely say that Square sees it as a next frontier as well, based on their the price they paid for Afterpay. Kothai, my original impression when we were talking about this is that there wasn't really a natural fit for buy now, pay later in a grocery store setting. But you pointed out that that's not really true, that you even see this as well, correct?
Yeah, so generally speaking, we don't offer a buy now, pay later solution like a Wayfair would, for instance. We don't have that as an option either through ecom or standard retail. But what you can do is you can go to one of these buy now, pay later solutions and you can sign up for an account there. And that account will create a debit card, a commercial debit card that gets added to your Apple Pay wallet. And then when you come to check out in our stores, you can technically use that card to pay. So your transaction is on your side, it is very much a buy now, pay later solution because you pay it in the 4 installments or whatever the installment plan is. But on our side, we see a commercial debit charge as a payment method. So we don't directly see buy now, pay later, but it is indirectly used in our stores. And I can see that volume growing. It's very small. So it's very small compared to some of the other volume that we have, but it has been growing over the last several months and quarters.
That's interesting. So you can actually, even though you don't explicitly do it, you can tell when those are being used for shopping at your stores?
That is, yes, I can tell because we pay more for commercial credit than we do for debit and other forms of payment. So yes, I can tell when my cost of payment goes up.
So there we go, back to the cost of acceptance again. I'm realizing just exactly what I thought was going to happen. We're running a little bit short on time already, which is hopefully a function of what I thought was a really great conversation, and hopefully the audience has agreed as well. David, let me check. I believe, again, buy now, pay later probably took hold in Canada a little bit before it did in the U.S. Anything you can share in terms of your perspectives of what you've seen, whether in Canada or the U.S. with regard to the solution?
Yeah, so I mean, actually, I guess that's a funny one because I think it's actually lagging a little bit in Canada relative to other markets.
Oh, really?
Right? So I think you've seen it, much more established in Europe, Australia, fast follow right into the U.S. market. Canadian market a little slower in terms of uptake and the big providers expanding here. Though we saw a firm who had acquired PayBright was one of the larger ones in Canada that I believe is closing sometime this year. But I think what you're seeing are a couple of different models, right? So I think and I think this is where it ends up being a big topic that ends up kind of getting the same wording that there's kind of two different propositions sometimes in my mind. one, we saw about, again, that conversion, and Matteo really captured a lot of that, getting that messaging up front, getting the customer knowing and planning and purchasing around that option. And then what you see a lot, and the card networks and others are getting into the space, which is the post-transaction, right? So how do I take my credit card debt, and how do I kind of take that large purchase and then balance it out over 4 monthly payments or over 3, 6, 12 months, right? And again, putting the customer in control of managing their debt, managing their finances. And so I think it's interesting, and obviously they converge in a similar way, but they almost in some ways fulfill separate needs or separate core value propositions. I know we're running out of time. I think the one thing I want to go back to, maybe to Manash's point around B2B payments, and this is something that is very relevant, I think, into Canada and the US, but both countries are in the midst of really what we would call a once in a generation payments uplift. So in Canada, we have a payments modernization with real-time rails. You have the clearinghouse in the US that launched a real-time payment system, and then the Fed has also said that they're going to be doing the same, and that's fast approaching, right? 2023 is when that's planned. And so I think the B2B payment space is especially ripe for disruption and for real innovation in payments. When you think about how much traffic, and checks are declining, they slowly declining, but it is there's a convenience of the check for the sender, in terms of how they can fulfill a payment, right? It's in some ways it's more effortless, but when you think of it as an end-to-end process, obviously it's very complex and very manual. And so you're going to see with real-time payments a lot of really interesting payment capabilities, the ability to send a request for payment. Think about embedding that payment request or the payment within a digital invoice. There's going to be some really interesting things that emerge, and I think as soon as the businesses are able to grasp these payment capabilities, you're going to see some real opportunities for operational efficiencies and enhancements and innovation. So that's something I'd say to stay tuned. And I'm glad that I said that Manash raised that as well, to make sure that we got to cover that a little bit in our jam-packed session here.
I was going to say thank you, and that was the next question that we just ran out of time for in terms of real-time payments. So if the FinTech talents folks would like, I'm hopefully the same audience, the same group can come back next time and speak more about the real-time payment integration that's obviously taking place and the implications that has on both the cost and the experience side. Again, we're a little bit over time, but again, thanks to everybody for a great conversation. David, Matteo, Kothai, and Manash. We will leave the window open for a few more seconds if you'd like to, continue chatting and maybe, share any kind of follow-up questions. I'm sure we'd be happy to continue that conversation. Hopefully, we kind of set the stage really well here as the first session on the opportunity stage. If you stay tuned, next up here will be just-in-time lending, which is relatively related to what we've just been speaking about. Thanks so much for joining us.